Good afternoon, everyone. Saturday, 3 p.m. as always, and we'll find a good topic that really meet your needs. And those topics we select every weekend or during the week. It is not something we just pull out of blue. It is a question or questions that come through in the week, and we make it into a topic. A lot of times, especially right now, a lot of health insurance renewals are going on. So when our small business owners and start looking into renew their health insurance or getting the new ones, and so their question is, can I deduct it? So before we dive into it, folks, I just want to make sure you're super clear of a concept, right? Tax deduction that offsets your income, and the tax credit is offset your taxes, so they're different. And health insurance is not a tax credit. It is a tax deduction, which means what? Which means reduce your taxable income. So now let's kind of, before we go on to the PowerPoint, I want to introduce you two things really quickly. And our website, communitycpa.com. And I want to invite you over here. Not only you can make appointment with us right here immediately, because you will have the partners listed for you and our area of expertise. If you want to speak Spanish and you have song there, so if you want to talk about your tax planning, your estate planning, you have me here. So you can tap into our specialty, make appointment. You will see my calendar right there, because most of my calendars, if it is full, and then it will show you, like if you click the 21st, it tells you when I have available, right? This is a good resources for you. Other than that, I also want to point out our career sections. And we constantly, continuously, persistently hiring new employees. And we hire a lot, and we let people get to know who we are. And doesn't mean we keep everyone, but the one that we kept, and they are super good. So they are the one that have the same mission and understanding as the firm, and we march to the same direction. That's how we run the company. We run the company because we have the same belief, and we are community-centered. We are people-focused. We are working for fairness. So not because of your lacking of knowledge, so you're going to pay more taxes. Absolutely not allowed in this firm. We want that knowledge to be yours. That's why we put out free webinars, and these webinars you are listening also come on YouTube channel, and we post them after today. It will post it right there on YouTube. So even if you didn't show up at 3 p.m. and you think that topic is interesting to you, then you can come to YouTube and really watch it again. And we have so many videos, but just pay attention to the time mark. And the closer to today, the more relevant they are, right? So, but health insurance, for instance, didn't really change a lot. So you can literally watch this one. By December, it will be the same. So I want to point this two out, and let's go for our PowerPoint at this point. So our topic today is health insurance deductions for small business owners. As a small business owners, what kind of business structure you have? You either Schedule C, or even if you are Schedule E because you are a full-time real estate person and you are still a 1040 related business owners, then you can be a partnership, you can be S Corp, you can be C Corp. So we're going to cover all these scenarios. Depends on what tax structure you are in, then how the health insurance deduction would be different for you. So that is a question we face, and we need to answer to our clients literally every day. If it is not every week during the tax season, right now we had more of these questions coming up again because it is renewal season. People renew their insurance and they have questions. So let's go for it. And the speaker information, I know some of you are new. I always have new new audience come online, and welcome to Community CPA's YouTube channel and our webinar. And I am the CEO and the managing partner at Community CPA. I founded the firm back in 1998, and I served on National Taxpayer Advocacy Panel. This is a federal advisory committee to IRS. I served there for 3 years, and you can contact me. You can contact me by my email, ying@communitycpa.com, and you can also go to Community CPA to book appointment with me, right? And here, I also wrote a book in 2019, which is 8 a.m., Appointment with Ying at 8 a.m. This book is all about how people start up their business here in the United States of America. If you are a student visa holder, or if you are a person across the border without proper visa, but you got ambitions in business, how do you start the business properly and abide by the rules and regulations here in the business world in the United States of America? And the book lays out stories like Jose Hernandez, like Emily and Tim. I have stories in there to teach you, not boring, and it is one of the books that really will bring you the real picture of how to be an entrepreneur here in the United States of America. And I actually also finished my second book, which is Appointment with Ying at 10 a.m. That book will be published this year. I'm working on the book cover right now as we speak. That is how to grow your business. Once you got it set up, then your job is to grow it. How to grow a business here in the United States of America and really buy into the culture, really knows the rules and regulations. So that book is all about people's story, failing story, successful story. It's a potpourri of everything, how you need to run your business in that second book. And of course, I have a 2 p.m., 6 p.m. coming up. The 2 p.m. book will be a merger and acquisition. It's basically you grow your business and you want to expand, and what you're going to do, right? Or even if you want to sell, how are you going to sell it? So that would be the 2 p.m. At 6 p.m. is how to retire from your business. Let's redefine the retirement for today's people and not our parents' generation. They're not the same. And not people who retired right now already. We, the younger generation, need to have a retirement that is totally different from what happened in the past. So that's my 6 p.m. Book that will be written. I haven't really read that just because I myself hasn't really stepped into that world yet. But the book is really reflecting of my own journey. So I am comfortable with the growth part, and I'm also comfortable with acquisition merger. So I will write that, and then soon I will do that 6 p.m. So now the webinar is no responsibility, right? Because it's a free webinar. The knowledge really meant for the goodness of your baseline. And once you got a little bit understanding out of this webinar, you want to make sure that you dive deeper if you have a specific need for your own. But don't rely on this webinar to make decisions. Based on this webinar, learn more from your advisor and then make decisions. All right. You know that today's webinar is not about how to get a cheaper life insurance. So that is not what we're talking about. What we're talking about is if you are a self-employed person, and if you are a member of a LLC, or if you are a shareholder of an S Corp, or you are even a shareholder of a C Corp, and if you are all of these, and how exactly the health insurance gonna play in as a deduction. That is our main focus today. So let's just look at health insurance deduction overall. If you are an employee of a company, say you work for Microsoft, you get a W-2, right? And your health insurance has two parts. One part, the company pays part of it. The other part, you pay for it, right? So that together is your total health insurance expense. For example, at Community CPA, the company, community CPA, pays 80% of the health insurance. So let's say for a family of one, the health insurance is $1,200. So the company will pay 80% of it. Okay, so that would be what? That will be $960. Then the balance will be paid by you out of your payroll deduction. When I say payroll deduction, that means it didn't really go into calculate taxes. It is actually deducted out for you, so you never really paid taxes for that. Okay, so now that is when you are employee. But what if you are a small business owner? That then it depends on your business structure, tax structure. So now let's look at when you are employee. What I mean by payroll deduction, I want you to look at this pay stub of a person. So this person had a salary of $1,500, and did you see that health insurance deduction 118.56? This is where that deduction comes in, because they deducted from your income. You don't pay taxes on that. This is the portion you pay. But of course, every company is different, right? A community CPA is 80-20, but there's a lot of companies are 50-50. So you deduct half and your employer pay half. And then when you get your W-2 at the end of the year, there, the 12B DD represents the total amount of health insurance premium your employer paid for you. Okay, so they already paid it for you. Every month your premium come in, company already paid, so they add that up and put in the 12DD. So that is where, and you look at that number, but that's not the number you paid. That's what the employer paid for you. So you are taking care of it already, and your medical insurance premium did not pay taxes. All right, so we are leaving the employee portion because that's not our focus. Our focus is that if you are a business owner and what you are going to face. So the structure, the popular structure of small business is Schedule C, Partnership 1065, and S Corp and the C Corp. Am I right? So those are the four most often. So now let's look at Schedule C. Who is eligible for the self-employed health insurance deduction under Schedule C umbrella? So we're talking about 1040, Schedule C. We're not talking about anything else in this particular setting. And who is eligible? The insurance plan must be established under your business name, under your business. I know you will say that, well, I'm sole proprietor, so I actually just have my name and I just have my social security number. But in a lot of cases, when you are sole proprietor, you also have a LLC with a EIN number. So when you purchase that health insurance for yourself or for your family, you want to make sure that you use the business name and business EIN number. If you have a profit under Schedule C, and you can deduct your health insurance. I'll show you where to deduct it, but I want you to remember, if you have a profit, you can deduct. Let's say your Schedule C profit is $20,000, and your health insurance is $20,000. Then you can deduct. But if your profit is $10,000, your health insurance is $20,000, then you can only deduct $10,000. So you cannot use health insurance premium to create more loss. That's what I'm trying to tell you, right? So if you have a loss, negative $10,000, you say I have $20,000 health insurance, that's too bad. You're not gonna be able to deduct it the way it should be, but you can deduct it in Schedule A. Okay, so now let's look at my second slide. So you're saying that, but who can I include in my premium to deduct? Yourself, your spouse, and your children who is under age 27. Okay, so pretty much your family, they will benefit from you running a business and can deduct. And if you have access to participate in an employer-sponsored subsidized health plan. For example, in your household, your wife is working and she bought the whole family health insurance, and to cover all of you, and you're running a Schedule C business, and you're like, oh, I want to use my portion of that to deduct. No, you can't. And if it is already sponsored by the employer, that's what it is, and you cannot deduct. So employer could be someone you or your spouse works for. You see that? You file joint return. If your spouse already have insurance for you, you cannot deduct the insurance for yourself again. If the plan is sponsored by the employer, your health insurance premium cannot be deducted as a self-employed health insurance deduction. So that is just to say that, let's say if your wife is sponsoring whole family, and the portion of yours is 10,000. You cannot say, well, let's just take that 10,000. I'm going to deduct that because that is for me. I'm self-employed. So you cannot do that. Remember we mentioned when she is an employee, she actually didn't pay taxes for that 20,000, right? Because part of it is paid by the company, the other part of it is becoming a payroll deduction, so she didn't pay taxes, therefore there's no tax deduction. Can I deduct my health insurance premium directly on Schedule C? Such a great question, happens all the time. A lot of people ask for that, and the answer is no. You cannot deduct your health insurance. You're the boss, you're the self-employed, on Schedule C directly. However, you have a place to deduct it. And what about if you have an employee and you pay their health insurance? Do you have a place to deduct on Schedule C? Yes. That is line 14. So let's look at the form. Now, you see, I highlighted 2. I highlighted 14 to tell you that if you have an employee, you paid health insurance premium for them, that's where it goes. You can deduct. And number 15 is insurance, but that's not the health insurance for you, my dear. That is maybe your business general liability insurance, your unemployment insurance, and it is other insurance, not health insurance. Then you may wonder that, then where do I put mine? I am the self-employed individual. I run the Schedule C. Where would be mine insurance premium to be deducted? It's right here, folks. It is on 1040. On the first page, folks. Not the first page. It's the Schedule 1, Part 2. On the Schedule 1 page, in the old form, it's a first page, but they changed it in 2018, right? So now it is the Schedule 1. And you see that 17, self-employed health insurance deduction, that's where you go. That's where you put your 20,000 in, okay? So knowing that, what if earlier we said that, well, you didn't make money. You lost 20,000 in Schedule C. So your Schedule C is a loss. Then you cannot use this one. Even if you used it, your computer program that helps you to fill in the forms would be smart enough to disallow that. So you will be going to Schedule A to claim it. Makes sense? Right? So this is a Schedule C. I hope I made it really clear for you. Right? So you have health insurance you can buy. And you can buy for your whole family. You can deduct it right here on the line 17. And if you got a loss, and you can go to Schedule A to deduct, but if you pay for your employee health insurance, not you, then you can put on Schedule C, line 14. All right, let's move on to partnership. So, what happened if I fill up 1065? Okay, I have partners. I fill up 1065, and who is eligible to deduct health insurance? Members, general liability, limited liability, all kind of members. So you are eligible, and you report health insurance premium as a guaranteed payment on K1. You hear me? So let's say your health insurance premium is 20,000. You will report that 20,000 on guaranteed payment. This is to say that you need to pay that health insurance premium out of your partnership, right? Now, who can be in that health insurance? Of course, your spouse, your child that under 27 years old. Can the health insurance policy be under the partnership's name or under my name? What's the deal? Can I have it under my name? It doesn't matter. It doesn't matter. It can be under your name, can be under partnership name. But the key is, if you are the one paid health insurance out of your personal checking account, and you want the partnership to reimburse you. So that way it can make onto the guaranteed payment, right? So eventually it has to come out of the partnership account. So you want to make sure that, sure, you can pay premium yourself at the end of the year to write a check to reimburse yourself and make that guaranteed payment. This is all good. But the key is the partnership need to pay for it. Now, where to report that premium amount on K1? So you will be like, yeah, I pull out my K1, and where do I put? Where do I put my health insurance amount? It's on box 13, and the code, you use the code number M. You also need to have a guaranteed payment under box 4. So with this health insurance premium, you touch 3 things on the K1. You touch box 4, you touch box 13, and on the box 13, you need to put a code M. So I want to show you. What that looks like. Okay, so that's what I was earlier talking about. Here is the form, my dear. So now, and see the guaranteed payment. So you will put $20,000 here, but under the 13 other deductions, here you need to put in the code. So to indicate that is your health insurance premium. And of course, once it's guaranteed payment, it will automatically show up as a self-employment earning. Not just how guaranteed payment in the nature, that is a self-employment payment, right? So now you know that if you have health insurance premium that need to go through the partnership, you hold on to your K1 goes, I didn't see any number on the box 4A and the box 13, you know the reporting wasn't right. So you want to make sure you reported that right. I'm telling you why it is important. If you don't report that right, it doesn't come to your 1040. It doesn't land on the 17 line for the deduction. It will be something disappear. And then you will be like, oh, where's my health insurance deduction? Not there because you didn't fill up the K1 right. So make sure that is so important to have that K1. What is the line 17 that I was talking about? Is this one, my dear. See, this is like when you got the K1, if you fill up the box properly, then it will come to your 1040. The people who does your 1040 will follow the roadmap of K1, and their computer, if they don't understand why they're doing it, there's so many tax preparers are only good with key in numbers. They didn't know what that number gonna do to what, so they just let the computer drive them instead of they drive the computer. But that's not something we do here at Community CPA. We require people to understand when you put in number in this line, what other things get impacted, they need to know. All of our 12 tax preparers are good with that. So we make sure that we know what we are doing. And here, if you don't do that K1 correctly, and when you fill in the 1040 with your tax preparer, and you won't see the line 17 with the deduction number, then you're gonna pay taxes on that, right? Otherwise you don't. If you put that in as a deduction, reduces your income, so you don't pay tax. So does that make sense, folks? So you want to make sure your 1065 K1 is done miraculously accurate, and especially related to health insurance. It is a long route for a fix. We have clients who come to us to do 1040, and they had this partnership. Some company already did the partnership return because their partners are in the hurry to get done, so they already filed it. Then when they come to us, they were like, oh, I have a health insurance, and where is my deduction? The most we can do at that time is to put the health insurance premium under Schedule A. Schedule A is useless. Unless you have a lot more other to deduct, Schedule A doesn't get you anywhere. And you have to go above that 7.95%, and before you can deduct the first dollar, forget it. And I have not seen many people really qualify for medical deduction on Schedule A. So, make sure that you got your K1 right. Then the people who does your 1040 can do it the right thing for you. And this line 17 is a deduction. Reduces your income, therefore reduces your tax. All right. What about you have an S corporation? That is another thing we need to talk about, right? So S corporation has something special. Remember when we talk about members, we didn't really have any requirement whether you can deduct or not. Depends on how big of a membership you have within the LLC. But shareholders in S Corp has a requirement. You have to have more than 2% of share to have a deduction that related to your 1120S. So let's take a look at that. So assume you are more than 2% of shareholder in this S corporation, okay? So can you include your spouse and other family members into the health insurance package? The answer is yes, a big fat yes. And even if the family member doesn't have any stock under their name. Isn't that good? So if you are having 3% of shares, and then you can have deduction for your health insurance and for you to cover your spouse and cover your children who are already 26 but refuse to grow up, but they're still 6. So you can cover them for 1 more year. And so these are, things, benefit that you have on your 1120S. I know you smile when I say, the kids who are 26 but they're 6, or 16, if they're a little better, we give them a little 10 in front of their number. But I have seen too many kids, big young adult, and act like 5 years old. All right. Can the policy to be in your name or in business name? You see, the answer is either way is okay. It's okay to be under your name. And so you cover your family. But the key is you have to eventually get that paid by the company, okay? So to be on the company's book. You can either pay the premium yourself, or the S corporation can pay them and report them as wages. And if the policy is in your name and you pay the premium yourself, the S corporation must reimburse you. You see how the key is that you have the expense come out of the S corp. All right? If you are greater than 2% holder, you need to report health insurance premium in your W-2. Okay, how do you report that in your W-2? Basically, it's before tax again, right? Because in your W-2, maybe you have a portion that is company paid, so you don't pay taxes on that anyway. But the portion that you paid, and that would be coming out as a payroll deduction, just like how you were an employee in the very beginning. We were talking about that because in the S corporation, even though you are a shareholder, but you are also an employee shareholder. So you go from W-2. However, the amount is free from Medicare, unemployment, and the Social Security taxes. So what it says is that you don't need to worry about that portion of medical insurance you paid to be charged with Social Security, Medicare. You know how when we pay regular salaries and we have to, the employee has to pay a portion, the employer match. So you don't have that worry. You need to increase box 1. That is your W-2. Box 1 is what? That's a gross salary by the amount of health insurance premium, and report the same amount in box 14. This is not the same as 1065 or as a partnership. This is different when you have S Corp. So let me show you what I mean. I know it is just saying it is abstract and you want to see exactly what do you mean, Ying? I want to know. Okay, here is what you need to know. And this is a W-2 for a shareholder who has more than 2% of shares. Okay, so the S Corp owner has insurance premium of 20K. Box 1 and the box 4 will be changed, but not box 3 and box 5. Because box 3 and 5 are what? They're Social Security Medicare tax. If you have a number in the 3 and 5, you pay Social Security Medicare tax, right? But box 1 is your total compensation. What is your total compensation? Your total compensation is $120,000, but down there on the 14, it says that $20,000 is medical insurance premium cost. What does that do for you? When you fill in, when you go to do your 1040 and you give your W-2 to your preparer, and they will fill in the box for you. But that 14 other box will drive the number, will drive that deduction over to your 1040, and on 1040 Schedule 1 will drive over here. Say self-employed health insurance deduction. And it will come over here to offset your income, ladies and gentlemen. Even though the box 1 got increased, but it's got reversed out. So your medical insurance premium is free of tax. Make sense? Makes sense, right? So as a shareholder of a S Corp, let's say you didn't really offer anybody health insurance, and you are just doing it yourself because you're a shareholder. And you're a shareholder, you own this business. And then your W-2 is gonna be showing up just like how we were talking about. Like this, okay? See, you don't have the 12 number, the 12 DD number here, because you are the shareholder and you treated your health insurance premium in this way. You increase your gross and then you increase your 14 other, and with that medical premium deduction, so it will run into your 1040, take care of you. But what if you don't do that? And for community CPA, for example, even though I am a shareholder, but I am doing the same thing as the rest of the group. So we are taking 80% paid by the company, 20% paid by ourselves, and in the payroll, we already treated the payroll to be a payroll deduction on the 20%, so we don't pay taxes on the health insurance. So you see there's two ways of doing it, right? You know, when you are treating yourself as employee like the rest of the employee, or you treat yourself differently because you didn't offer employee health insurance. So both ways you don't pay taxes, but they reflected on the W-2 differently, right? All right, so now you see how that works on 1120S. Now what about C Corp? What about corporation that is not a pass-through? That's a C Corp, right? Can S Corp provide health insurance as a tax-free benefit to their non-owner employee? Yes, it can also be deducted as a business expense. This is just one last slide. I didn't really explain for S Corp. This is just the way I was telling you, if you pay health insurance for employee, then on the S Corp tax return, there's employee benefit line that you will put that in there because you deduct directly out of the business expense. The answer is yes, you actually can deduct it. So the principle is, I think by now you sort of know what I'm talking about. Medical insurance in some way of performance, and it is a tax deduction other than if it is other than in the case where you couldn't deduct because your Schedule C is at a loss. But in any case, if you can deduct it normally as a business expense or offset on the line 17, then you have a Schedule A to work with. And of course, I also told you that Schedule A is useless and it's really difficult to get any medical benefit to be deducted. But remember, Schedule A also captures the expense. So you have a health insurance premium, that is already paid, you already deducted out of the income. But what about the out of pocket? What if something really happened at home and you got chemotherapies and you got thousands under your belt that you owe to the hospital? Those expenses can go on to Schedule A. But remember, you can't deduct any of that until the medical expenses is over and they exceed 7.95% of your gross income. So, I mean, that's a lot. If you make 100,000, you have to, your medical expense has to be almost 8,000 before you can deduct the first dollars. Very small, right? And the plus Schedule A has very high deduction, very high standard deduction. So most of the people use standard deduction. So with that said, it's not really helpful. But you know that if you are a small business owner, your health insurance premium should not pay taxes, should be deducted. Figure that out, right? We covered Schedule C, we covered 1065, we covered S Corporation, now we're talking about C Corp. Now, C Corporation can take health insurance premium paid for shareholders, employees, and their families as a business deduction. Yeah, you hear me right. They take that in as a business deduction, so it doesn't even land on your 1040. So, a C Corporation can simply reimburse or pay for health insurance premium. If they reimburse and money comes to you, say I have a C Corporation and I bought health insurance, but it's supposed to be bought by the C Corp. So C Corp write me a check, I take it home, deposit in my personal bank account. C Corporation has expense, it's called health insurance premium expense. So C Corporation can reimburse you, then deduct that as a business expense. And the C Corporation owners can take advantage of health reimbursement agreements for tax-free reimbursement of medical cost. All right, let me explain this. So what happened is, if you have a C Corporation and your company has came up with a resolution to pay for all out-of-pocket expenses of all the employees, okay, and or to pay for its executives, however you decide, then the cancer treatment I was talking about, it will be reimbursed. That will be a business expense. See, a lot of times often when I talk about those corporations, you have S Corporation, you have a C Corporation, right? The biggest difference is that in S Corporation, S stands for what? Stands for socialism. And so whatever benefit the shareholder has, the employee has. But C Corporation stands for capitalism. So you can make a C Corporation benefiting the small group of folks. Sanders at one time, when he was running for a presidential election, and a lot of his strong actions that really sort of gathered people's support is related to reform to C Corporation. So these kind of giant C Corporation, those big corporations out there, we know them, and how they can carve out benefit for executives, but the workers are workers and they don't have that. So those are being viewed not socialism enough that can be reformed. So there's a lot of controversy related to that. But the reality today is, if you have a C Corporation and you have, your adult child as an employee in your C Corporation, and your resolution is pay everybody's medical insurance, then you pay it. It is a business expense, okay? So you can establish medical dental reimbursement plan. So there's so many things that you can do. So let me give you a list of the C Corp. And you see, we don't really go into 1040 when we talk about C Corp because it's standalone. It is separated from your 1040. And this has nothing to do with your 1040. We don't use line 17. And it is all deducted right here inside of the C corporation. So tax deductible fringe benefit in C corporation, health dental plans, medical reimbursement plans, long-term care plan, group term life insurance, disability insurance, just the list goes on. Okay, so if you are intrigued about, oh really, I am thinking about it, and give us a call and get on to our appointment, on the website, and discuss about the possibility, discuss about your plan. And really, when you grow business, it's almost like growing your family. And when you are single, you live in an apartment. When you get married, you want a condo. Then when you got 5 kids, you need a big house. Your life is going that way, and you change, right? Business is the same. If you think business can stay the same, no change, that means your business is going down. There's no such a thing about a business can stay the same. There's no such a thing about the business has a sweet spot. Forget it. They're all sour spot if you know there is a sweet spot. So you need to keep on refreshing, learning, upgrading to your business itself. And just from health insurance premium standpoint, and at some point of time, when you make so much money under S Corporation, you should become a C Corp, not stay at S Corp. Personal tax return rate, personal income tax rate is much higher than C Corporation income tax rate. Here, we have 21% flat rate. When Trump was the president, it was 15% flat rate. So amazing, right? How amazing that is. One different White House occupant can make the economic difference for our life. And but after all, I care about the dollars, but I more care about morale of the people who live in the White House. And I'll tell you that one thing I'm really concerned with today is that now American used to be a nation of we don't lie. We're really honest people. Now we got those clowns out there and made everybody thinks that they can lie straight-faced and no big deal. What a shame, right? Let's not be that way. And we want our taxes to be done right, and we want our taxes to be done under the rules the tax regulation give us, and we want to maximize that and use all the rules available to you. And for small business owner, you think you underpay taxes, you think you are taking here a little bit, there a little bit, save taxes. Don't do that. You have much better tools to save a lot more money than your little things you're doing out there and making you lose sleep. I always tell our small business owner that if you go on to have that relationship with capable CPA firms, and you will win in the business war. But if you are just kind of not wanting to explore, to learn, coming into webinars is like pulling your teeth, then you can't really grow. Okay, so I hope that we are successful in our small business endeavors. At the same time, good luck to our country so we can continue to be the best country in the world. And I thank you for joining me and share my thought, share my sentiment, and I'm really concerned what's going on right now. And here, this is our email. And by the way, today's webinar was written by Jolene. Jolene is our tax directors here at Community CPA. And I know when you go on the internet, you don't see her. She's our tax director and she's not on there. But if you want to talk to her and know that question, she might be able to answer to you. And you can find her on our website and you will see all our managers and directors in our firm. And Jolene at communitycpa.com and Catherine at communitycpa.com. They are the people who put the content of the webinar together for me. And do you know that we're open on Saturday? Do you know that we're the only CPA firm open 6 days a week? Yes. So we're different. And I will talk to you again. And my friend, and I know you remember us. Whenever you need us, come over and we'll